What's up, traders? Welcome back to another weekly market analysis with Forex SPV. It's another Sunday, and as always, we're here to break down the markets and get ready for the week ahead. If you're serious about trading, you know that preparation is key, and that's exactly what we're doing today. So I'll be analyzing 4 key pairs. I'll be looking at Euro USD. I'll be looking at USDZAR. I'll be looking at Pound CAD. And of course, I'll be looking at gold. So as usual, I'll break down the technical analysis using the MQP alloy strategy. I'll touch a bit on the fundamental outlook, and I'll give you my trading bias. So before we get started, make sure you've subscribed to the channel, hit the like button and turn on the notification bell so that you don't miss any of our updates. So let's dive right in. So let's start with the Euro USD. So in the last week, we have seen a bit of consolidation on Euro USD, and this is because the dollar has also been consolidating. So you can see this is the whole week. So price has only been ranging on this rectangle here. And if we look on the fundamentals on Euro, we have seen in the couple of weeks since the 1st of March, Euro has been strong, and the ECB interest rate decision came out aligning with the market expectations. So they cut the interest rate from 2.9% to 2.65%. The decision supports the euro strength against the dollar. So we did see Euro USD going up. So we had a very good bullish momentum in the first weeks of this month. And research reports on the US economic data, when you look at the ISM manufacturing index, the retail sales, even the NFP report, are all disappointing, adding to pressure on the dollar becoming weak. So on the technicals, let us start our analysis on the monthly time frame as usual. So on the monthly, we look on key support and resistance levels. So use the line chart here. So the current market price is here. So the key support and resistance levels that are close to the current market prices are these two here, okay? So let's go back to the candlesticks. And here, if you remember our analysis on the past 2 weeks, we saw that this was an order block here and price bounced on this order block. We had a doji and an inverted hammer here, and you can see how the monthly structure here is showing that we are expecting to have a very good bullish momentum. So the bearish trend is gone now, and we should be expecting for a bullish trend. So on the weekly time frame, so we had this very good bullish candle on the previous week, and that is before last week. So on the last week, you can see here we are having like a spinny top, but we have a week here to fill, so I should be expecting for price to continue going up. Although we are on this 200 EMA, we might have a little retracement, but price should continue going up here. Price should continue going up. Let's see if this area here, this is it's not a major area of resistance here, but we have a little resistance here, and the 200 EMA is there, but the bullish market structure still holds from here. And on the daily time frame, the market had moved up. We had the first consolidation, and this here is another move up, and we are on our second consolidation. So price is still above the 800 EMA here. You can see we are seeing signs of consolidation, and we should be expecting for a continuation pattern to occur around this area. And this area is also a zone here. So we had a monthly high on November last year at this area, and we are on the same level this year. So I should be expecting for a breakout here, and we have a liquidity pool area about there. So this should be a consolidation before the market goes up. And on the hour fall, let us look on the TDI. So the TDI was on level extreme high, and here it was, the level extreme high, and this is a place where the market started, a price level where the market started consolidating. And you can see the TDI had started falling here. Okay, so the TDI has started falling, and we see this is a sign of this here is a sign of a shark fin around the level middle. So though we are not there yet, but it's so near to that level, indicating that we can have a peak reset here. So if we have a shark fin around the level middle, we should be expecting for a peak reset, but a shark fin around the level high, level extreme high, or level low, and level extreme low, surely it would mean for price to reverse direction. So basically a peak reversal. So we can see a consolidation had occurred of this area. So we have a range here. We have a range where the consolidation price is bouncing around this area. So I should be expecting for the market to still be consolidating until we have a breakout, and I still expect for the market to have a bullish breakout. So this was our anticipation of the dollar, or based on last week analysis. As you can see, the whole week there was a consolidation. So this is the daily time frame. If you go down on the hour one time frame, you can see the consolidation is very stiff here, but still price has not breakout up or down. So before going down, I should be expecting for the dollar to have a bullish breakout and then go down, simply because above these highs, we have buy stops. So we should rate them before we sell. But also when you look at the Euro index, the Euro index has been rallying. You can see here, we had a very good bullish momentum there. And on the monthly time frame, so the day, on the daily time frame, the daily candle that closed on Friday, you can see it's the same as what we have on EURUSD here. So you can see the resemblance. So this reflects that the disparity does match. And this is the weekly time frame. So price is still struggling to break this area of resistance, but with this momentum, I should be seeing a breakout, and then all this area is an area of liquidity for them. So they will rally very well going up. So on EURUSD, the overall trend should be bullish, but then we are still in consolidation. So we should be monitoring the markets for a breakout. So I should be expecting for price to do this, come back to this large quarter point and then start the movement there. So that's my anticipation on Euro USD. So moving on to USDZAR. Let's look on the technicals here. So our last week analysis, we expect for price to have a reset and then for the market to continue down. That is what we expected. And since the dollar was in consolidation, since the dollar was in consolidation, also USDZAR did not have like a big movement. So this here, this here is a peak. So this here is a peak reset. This here is a peak reset. So price started its movement here, and we're having a peak reset there, and price is going down. So our anticipation still holds. Our anticipation still holds. Even on the daily time frame, you can see it has been the 50 EMA, and you can see prices showing acceleration going down. The weekly time frame the same. You can see price rallying going down. So our anticipation still holds. So we should be expecting for USDZAR to sell. Sell. So let's draw the ADR boxes here. Say one, ADR times 2, and should be having ADR times 3. So for USDZAR, it was an easy analysis as we have been following it for a couple of weeks. So where should price bounce? So it has already bounced around this area. So we have two possibilities here. So we have this key price level, and we have this area here. So price might consolidate around this area and then continue down, or it might retrace to this level and then continue down. Okay. So I would make my anticipation as that. So that's the best possible scenario that can occur on USDZAR. So let us go to GBPCAD. So Canadian dollar has been just been selling, just been selling here for at least a month. And this is because Canada's response to US tariffs and adjustment in trade agreements have influenced the Canadian dollar's valuation, and we have seen Canadian dollar dropping. And GBP, on the other hand, we had a little bit of a bullish rally here. So we had this bullish rally. So basically, pound CAD was buying big. So pound CAD was buying big. And here we have a code of wood. This is a code of wood happening right here, indicating that we can sell, but is it the overall trend? So let us do analysis from the monthly time frame to see if the bearish would hold. So the current market price is here. Okay, so we are looking at areas of support and resistance that are close to the current market prices. So we have those resistance levels there. And we have an area of support just there. So you can see we are having a very good bullish momentum there. Price has bounced on these two EMAs. So we have the 13 and the 200 EMA around this area. So this consolidation looks exactly as what EURUSD is doing here on the daily time frame. So the same happened or GBPCAD on monthly time frame. And we're having this bullish momentum. We should be expecting for price to continue up. That is what I expect. So the bullish momentum still holds. And the weekly time frame, still the weekly time frame still supports our bullish market structure. So the overall bullish market structure still holds. So if we go to the daily time frame, we can simply look at the market flow having retracements going down and then big movements going up. So if we see sell opportunities, those are short-term sell opportunities, but then we should be expecting for price to rally up simply because the monthly and the weekly time frames still they support bullish market structure. So I should be expecting for price to come to this level here and then continue going up. That is what I should be expecting. So the TDI had started moving from this point here. So it had this movement. We had like peak reset, a little bullish movement, and then the bearish still holds. And you can see the structure here. It started its movement from the large quarter point. We're still going down. Okay, so basically we should be selling a bit before we buy. So we should be selling a bit before we buy. So right now, I should be expecting for GBPCAD to first reach the large quarter point down here. And then we have just below it, this is the area of support that we have drawn here. So where the 13 EMA is. So there is where we should be expecting for price to form a peak reset. So that is my anticipation. Let me draw the ADR boxes and see how many pips it has moved so far. How much has it covered? So 149. Okay, so this can go up to 3 times ADR. Let me see where the 3 times ADR ends. So we're having our next area of support down here. So if price does break this area here, we should be expecting for price to reach this large quarter point below here. So that is on GBPCAD. So this is our first and what we should be expecting. But then if we have a breakout on this point, then our next target should be this point here, the large quarter point. And here is where price would form a very big peak and then would have a bullish trend. Okay, so that is our anticipation on GBPCAD. So finally, we should discuss gold. Let's discuss gold. And we have seen gold seen some significant movements, and price has surged, and it has now reached $3,000, marking a historic high. So this happened on Friday. So our key area of support, of resistance right now is around 3,005. That is the price. And our key area of resistance that is below here, of support, is around 29.50. So around that price. That is our key support and resistance level. So we have a resistance at around 3005 and a support at around 2950. Yeah. So what caused gold to surge to $3,000? So investors usually look at gold as a safe haven asset, and they look at it in periods where there is global economic uncertainties, like periods like this, where we have the transition of President Donald Trump, we have these wars going on, and all these economic uncertainties have prompted investors to see gold as a safe haven asset and invest in gold. So basically, this has fueled gold's rally, and right now we have a historic high. So we should be expecting for price to correct a bit and then continue up, because right now the market structure is basically bullish. And last week, we have seen Forex SPV, we have taken our buy on gold on Thursday, yeah? We had a buy trade on gold. So the market structure is still bullish, but we have these key areas of support that we should be watching out. So if we have a retracement here, we should be having a retracement to these levels and then a continuation up. That's what I'll be expecting on gold. And on the R4, we have all the supportive evidence. So we're having a shark fin on the level high. We are having a bearish butterfly here, so the harmonic pattern, showing that we had this new high and then price did break it and we're having a new high there. So if there was a liquidity pool area, then the market makers or smart money have already raided it. So this here was a peak. We have three clear levels going up. We had our ADR boxes drawn and we saw that they have completed. So I should be expecting for price to have like a retracement and then a continuation going up. So the overall trend is bullish, but then we should have at least a bit of correction before going up. And that is on gold. So yesterday we had an important geopolitical development, and we should consider it going forth to the coming trading week. And this development is the recent US airstrike in Yemen that was ordered by President Trump. So this strike targeted Houthi rebels in response to their attacks on Red Sea shipping lanes. So such military actions can have several implications for the market. Let's consider three scenarios here. So let's consider the oil prices, let's consider the safe haven assets and the currency movement. So on the oil prices, so the Middle East is a critical region for global oil production and transportation. So escalation of conflicts like this can lead to concerns over oil supply disruptions. So that would potentially drive oil prices higher. And in turn, it would affect the oil commodities, so the energies, or we can also see movement in Canadian dollar. And on safe haven assets, so a move like this basically increases the geopolitical tensions. So leading investors to seek safe haven assets like gold and Swiss franc, and this can impact the currency and the commodity markets. And when we look at the US dollar may experience volatility as the investors assess the potential economic and political ramifications of the military action that has occurred. So traders, you should monitor these developments closely as they can introduce increased volatility, and there you can be presented both risk and opportunities, okay? So uh, we should be looking at how the market behaves tomorrow and maybe Tuesday, as these geopolitical movements have occurred during the weekend. So sometimes the market might open up with a gap to indicate a change in exchange rate that was occurred prior market open. So that wraps up our weekly analysis on these four pairs. And as always, you should always stay informed and prepared. Remember to use risk management. Remember to stay updated with the fundamentals coming up. So you should monitor them on these news trading platforms. So we have this news platforms like Forex Factory, the FX Trade, so university.com. So you should monitor the fundamentals there and be informed and stay prepared. So I would like for you to share your thoughts on which pair you're watching this week in the comments. And don't forget to like, subscribe, and turn on notification to stay updated with Forex SPV latest analysis. For more in-depth training and mentorship, you can visit our website, forexspv.com. Otherwise, I wish you a profitable trading week ahead.